Hello and welcome to Personable, a podcast focused on speaking to the world's best, enabling you to become the best you can be. This is the fourth Personable Markets episode in which every week I speak to a VC, investment banker or hedge fund manager. You're probably wondering for the second time where the hedge fund manager is, but my friend Luke Sloman was so good a few weeks ago that I've decided to get him back for another episode. Luke is a third-year business and management student at the University of Exeter, who's currently spending his year abroad at the University of Sydney. He grew up in Tokyo until the age of 13 before moving to the UK for boarding school. His academics interests focus on finance-related modules, which complement his broader studies in business and management. As I mentioned before, this is his second-time guest on Personable. I'm incredibly excited to have you today, Luke. I wanted to get started by asking you about the Fed rates. So just to kind of add some background, we've obviously, the Fed rates cuts have been the Fed has cut rates by 25 basis points. Jerome Powell referred to the cut as a risk management cut, focusing on more slowing the labour market than sticky inflation. And Fed officials predict two more rate cuts in 2025 and one in 2026. What was your kind of view when seeing the Fed rates, the Fed cut rates? What do you think will be the broader implications? Any more general thoughts on the Fed cutting rates?
First of all, thank you for having me back again on this podcast. Really enjoyed it last time, so was very happy I got the call up again. About the Fed rate cuts. So yeah, as you said, the Fed, as expected, cut rates by 25 basis points to bring the Fed target range down to about 4%, 4.25%. And obviously these are the first cuts in nearly a year since the last cuts were in December 2024. So I think there are quite a lot of implications for this, and obviously Donald Trump's been pushing for these cuts for a while now, and Stephen Mirren, the newly appointed, advisor, appointed to the Fed, who was appointed to the Fed board, who's Trump's advisor, voted for the 50 basis points cut. I think what the potential Fed cuts in the future will be driven by Trump's approach. But there are lots of implications as a result of these Fed cuts. First of all, for equities, low rates will increase the present value of future earnings. So this can disproportionately benefit growth stocks, especially tech and AI, where valuations are often hinged on long-dated cash flows. So then there may be more speculative flows into Nasdaq names. For fixed income, the short end yields will fall, but long end yields will depend on inflation expectations. Obviously, despite the interest rates cutting this week, inflation is still above the targeted 2% goal. I believe it's at 3.1%, if I'm not mistaken. So obviously, if investors believe that the cuts are premature, the yield curve could steepen. But on the other hand, if investors believe it's at the right time, then the yield could flatten, or it may even, it could invert. Go on. Yeah. No, please.
I wrote quite a few notes according to what you were saying. I don't know if you can hear the police in the background. But in terms of the actual rate cuts, I think this was kind of very expected by the markets. I think as for both people that are first time listening and getting more into the markets, but also more experienced investors, it almost seems that every day is almost like a week or a month in real life, in that what's sort of expected has an instantaneous impact on the markets, and the rate cuts were probably expected a few weeks before. And there was particularly the last time we discussed on the Markets podcast, there was the notion in which there was the question of independence between the Fed and with Trump. And I think it's kind of that sort of chatter has died down over the past week or so, particularly as the Fed has actually done what Trump wanted to do. You mentioned that the person that worked closely with Trump wanted to remove 50 basis points, but they only did 25. But with the expectation from the Fed to do two more this year and one more next year, that still sort of plays into what Trump wants. It's that same thing with stocks, to the extent to which how much they're diversified. When they're all going up at different rates, but when they're going down, there's often a correlation between stocks all across different industries. And it's the same thing with this, with both the Fed and with the administration, or the president kind of wanting the same thing. So I'm kind of interested to see, with both the unemployment rate and inflation moving forward, the impact that the Fed choose to take, and whether this sort of goes in line with what Donald Trump wants, or sorts of goes away from that. It's also been a copy of the UK as well. The UK has been decreasing rates, previously to what the US is doing. So I guess we can look at the UK for reference. There was also the notion of a strong recession impact in the US. That's kind of been the chatter for the past 18 months, particularly over there was the whole problem with the US and debt. And I think that got particularly hot within June 2024, July 2024, when they actually got to go about raising up when they had to raise the debt ceiling. And ever since then, there's been chatter about, in terms of the inflationary impacts, the amount of money that people have in their pockets, how much they can spend. And so this sort of seems from a signal of not only equities doing incredibly well, but also the Fed now saying, okay, despite the the broader market implications with inflation, we're going to focus on trying to create more jobs. Trump with his tariffs wants more investment into the US. Now with the lower rates, it enables businesses to go about borrowing more money at cheaper rates. We're obviously seeing a lot of business, which we'll chat about in a minute, with Apple, Oracle, Nvidia. So a lot of businesses in the US are doing very well. And I think it's the US's way of saying we're open for business. Another thing, quite interesting thing that's happened, not really that helpful for me wanting to work in the US post-university, but the H-1B visas in the US, which enable highly skilled workers to work in the United States. There's been a movement to which formerly it would cost about $1,500, maybe a couple of $1,000, four or five figures for a business to go about getting a worker in from the UK, from India, from Canada to come work in the US. And this was particularly important for startups and other companies alike that don't have as much money to be able to get in highly skilled workers that can't be replaced in the States. But now Donald Trump has made it so it costs $100,000 for people, for companies to actually hire people outside. So this is going to have quite a negative impact, particularly on startups which have smaller budgets, might have other priorities. If they've only raised 100,000 or 500,000 or a million or 2 million, they're not going to be able to pay people through equity when they actually need to just they need to pay 100K to get someone in. So on the one hand, it could be good for American workers, but also bad for startups with that sort of going on. What are your other general thoughts on the Fed's impact, the broader market implications of the Trump adding the $100,000 visa, the less of a chatter away from the recession impact? What are your thoughts on those issues?
I think it's quite clear what Trump's trying to do here. Obviously, he's trying to bring down the debt that the US has incurred over several years. Obviously, one of the main reasons why he wanted these Fed cuts was to reduce the annual interest bill, which I think is nearing $1 trillion, which is a very significant amount. So even a 25 basis point reduction, as seen now, we'll be talking about billions of dollars. I think it's also still interesting though that despite two cuts being more likely to be signaled this year, 9 out of the 19 members projected actually no further cuts within the Fed board. So I think it's quite interesting to see the split between more pro-Trump and more, I guess, independent Fed members. And with the visa situation, obviously it was $100,000, correct?
Yeah, 100,000.
Yeah, 100,000. Again, that boosts that's helped boost the government spending and reduce debt, and and also try and keep inflation low by having more opportunities for US workers. Obviously, with the recent unemployment statistics, and labor market concerns, I think it was a top agenda for Trump to do that, to not only help reduce the debt deficit, but also to create more jobs. As I think payroll has slowed to only 29,000 jobs a month being created on average over the past quarter, which is nearly 10 times less the pace of 2023, for example. So I think it's definitely a key area that the US has to look into over the next few months to try and rectify that.
I think the point you made about the payrolls, the number of jobs in the US is pretty interesting because in August it only rose by 22,000, which was below the expectations of 75,000. And looking at the Fed's two sort of primary metrics of inflation and unemployment rates, those have kind of been the primary ways to for the Fed to look at how well an economy is doing over time. You know, are there more jobs? If a company is doing well, surely they'll hire more people be employed, make more money. They'll want to work because they can earn more money, and then over time they can save it, spend it, etc. If people are thinking that they're going to get more money in the future, they're more likely to spend their money now because they feel like they need to save it less. But if they feel like the future's not going to do as well, they might want to save more money now in hopes of a less confident future. But I think what's kind of been an interesting dynamic, and I'm going to use AI kind of as the focal point. But even going back, so I did a podcast with a guy called Seth David Radwell. So he was educated at Harvard and he made a book called The American Schism, which is basically focusing on how the Republican and Democrat parties over time have sort of split in this kind of hyper polarization, as we're kind of seeing in the US from the left and the right, in which from basically on every single issue, not just from a point of, if you actually wrote it down on a piece of paper, scale of 1 to 10, how far or how close you are, but even from the notion of how mentally different people think they are, even almost like a race between parties. People think they're just completely polarized and completely different. But an interesting point that he brought up in that podcast was, if you go back, say, 20 years, maybe even 50 years, right? And you look at how people would get into media, for example, around 20 to 50 years ago, there were around 200,000 local newspapers, or all sort of like news within the US. And so if you wanted to go about and become a news anchor, news host, a writer, research, whatever, you could go and work at your local paper, and they would get money from local ads, etc. You could work on that, you'd do research in the background, you'd be a coffee boy, whatever you're doing, and you'd sort of you'd find your way up, right? Initially you're just getting tea and coffee, but then maybe they give you a bit more responsibility and you sort of work your way up. And even looking at more traditional careers, working at a place like McDonald's, or even any sort of big Intel, any big company, there was this sort of way that you could kind of build your way up. But that kind of age in which there's only a few huge companies in the world has sort of broken down. Even looking at tech, you've now got the Magnificent Seven, you've got the investment banks, you've got the AI companies, etc. There's a lot of companies. So that's why you're not seeing as many people just go down that route. But you're also seeing at the junior level, both in terms of people working at these bigger companies, but also smaller companies on the whole, they've been completely undermined. So the AI point is more the junior bit, but that same example I gave you of 200,000 newspapers in the US, there's only about 5,000 local newspapers now. So in terms of level of competition, I don't know what the math is from, I think it's like a 40th or something like that, going down from 200,000 to 5,000. There's much less opportunity for people to actually wanting to get into the newspapers. So we kind of saw that with the newspapers, with the rise of the internet. But now with AI, there's not as much of a need for junior people at all. Crunching numbers, doing Excel sheets, doing these more mundane tasks, which people would just get, juniors to spend a long time in an office trying to fix a PowerPoint presentation. There's not only the point of, we need these juniors to rise the ranks, but if you're a smaller company, particularly if you want to get acquired by a PE company or a private equity company is sort of involved and trying to cut out the numbers to, provide for their own investors, those junior people are a very easy set of people to get rid of, particularly when an AI tool can sort of do that job. So that's kind of a long-winded way of saying I'd be very interested to see how the Fed looks at the economy moving forward, when it's been showcased in numerous examples that AI can actually do the job of a lot of junior people. So the economy and the companies, both in terms of like the price they're at, how much revenue they're getting, how much government revenue is being got, the GDP of the country, how that all seems to grow, even with less people working, as AI, moves towards this idea of super intelligence. But even before that, as it becomes more adept at being able to do the lowest of the low skilled jobs, but also as you get up to, more intelligent and more thinking jobs moving forward.
Yeah, I think initially AI, as you've sort of pointed out, I think AI will initially reduce jobs, then generate. I think as you said, a lot of junior jobs are very very prone to being taken over by AI, as because AI can do it quicker, they can do it more efficiently, and it costs less for a company. So it makes more sense for a business to use AI to, do some research or make presentations, or what junior office workers do, just because it's in the bottom line. At what end of the day, businesses need to make money. They want to be profitable. You want to get as much market share as possible within whatever respective industry you're in. And one way to do that is to be more efficient and to reduce costs, which can drive better profitability and differentiate yourself against competitors. So yeah, definitely, I think as a result, AI will definitely get rid of employees at the start, but it's how in the future, it's how people adapt to that. Then, if this whole level of workers, all these junior staff, are made redundant in the future, or the jobs just don't exist, there will be a different job to supplement it. It's like throughout history, with every single technology that's been created, there's always been a new job created as a result of it. For example, when computers first came around, people were probably thinking, "Oh, we're going to get rid of that. That means that there's going to be so little jobs for secretaries who take notes, or people who are doing, people who are calculating stuff on by paper." But what just happened was that these people developed new skills and were able to adapt with the times. So I think it would be quite interesting to see, in even probably in the next 3 to 4 years, how people adapt, the new types of jobs that will be created as a result of it. Um, and I think if you look forward in 20, 30 years time, um, people have such different skills to what we have now, not just because they need it to work in these different types of jobs. And I think that'll actually come through from education as well. At some point, education is changing so quickly since well, as always, but especially in the last 3 years. I mean, 5 years ago, who would have predicted, who would have said, who would have used ChatGPT, or a AI
Yeah.
tool to help, with their work at school, right? Yet now it's not just people aren't just using it; it's actually being encouraged to use by teachers, of course, in the right way. There's no you can't be copying and pasting and using it unethically, but I think it shows how times are changing. And I think even with the Fed and Trump, and with the slow job creations that we've seen over the last quarter, I think in the future, that as a result of this AI, yes, there is a down. It's slow now, but I think at some point there will be a great demand for a job type which might not even exist right now as a result.
I can recall having a conversation, well, not even a conversation, but I can recall being in a science class when I was younger. We'll call it elementary or middle school. I was perhaps 8, 9, 10 years old, something around that. And the science teacher was explaining that there would be jobs when I was older and in the age of work that weren't around when I was 8 or 9 years old. And actually pointing to that point, maybe if someone's younger listening to this podcast thinking, what job is there that I could possibly be that isn't around right now? The jobs back in the day were, lawyer, doctor, banker, teacher, etc. And I can remember thinking the same thing, trying to think up an entire industry myself in my small young brain. And two sort of industries that have popped up, as there are an infinite number of more industries, but one is social media. Would we have ever imagined that it'd be this age in which initially you're just creating content for the love of it? But then secondly is, as you just pointed out, that age of AI. I think social media is a bit like the rise of football. So there's a Netflix series I enjoyed watching called The English Game, in which football was basically based on the sport played at Eton College, my old high school, Harrow, Tunbridge, and all of these other schools. And essentially over time, they would all meet, take the best parts from each game, and that then became football. And then you had all these factory owners all throughout the UK, and they would play the game. But then the people working the factories would also want to play, but they realized that if I can, just the basic point of capitalism, but if I can go about paying for Jimmy, who works at another factory, if I can pay him £1 more, he might come play for me. And so therefore that started to become the age of the professional era, and over time people built better teams, and that's now evolved in the Premier League and what football is today. But it's the exact same thing with social media, in which initially you had people creating content on all of the older social medias like Vine, which has now evolved into TikTok, YouTube, Instagram, etc. But people would pay for brand sponsorships. Instead of the attention economy wasn't, people was, when we were young, I'm 21, you're 20, people would focus on watching on TV, and so the ads would be on the TV. But now, as the attention has shifted to social media, where people are spending all their time, it's not just, let's see an ad in between all these posts, but a personalized approach. Mr. Beast, and now there isn't just a separate ad with this ad that's totally doesn't relate, but here is this thing, Honey, and how this ad browser directly relates to what Mr. Beast is doing. Maybe that ad partner has actually sponsored the video, and so you feel some form of connection to them. And it's the exact same thing with AI. We wouldn't have imagined, as you said, OpenAI and ChatGPT, this sort of Google, newly formed type Google, as you would have about 10 years ago. But actually, instead of you'd ask this question and have to sculpt your question to find what might come up on Google, it crafts a response in terms of using words that you and I can understand. What I think I wrote down critical thinking and initiative, because I've seen a lot of trends online recently of people like Stephen Bartlett of the Diary of a CEO or other big thought leaders saying where people should actually go about spending their time and what they should do to prepare for the future. Because exactly as what you just said, right, there could kind of be, as well as being an excitement element and wanting to get a new job, doing something new. If I was fired or let go from my job, like as a load of people happened to lose their jobs when at Twitter, now X, and all of these other roles that are going to be wiped out by AI, there is a level of an excitement to say, I could be doing something different. But in that immediacy of when you don't have a job, there's a level of fear. And so the reason I say initiative to me is the idea of doing what you can and what you have. And so if the inputs were prior, it was social media without the professional era, but now there's a professional era of social media. If it is the age that we're in right now with AI, it's what can I do with these tools? Writing an essay at school, if it's allowed. Prior, you would only be able to write it yourself, but now you can use AI to go about, does this fit the criteria of what they're asking me? This question, especially if you're neurodiverse, you might not be able to understand it or interpret it in the right way. What does someone else want to understand? What are the things that I might be missing? And so use it to enhance your behavior. So that's the initiative element. And then the critical thinking as well. Despite all of these, developments in AI and replacement of all these jobs, humans will always be needed to an extent. Even like a train driver on a train, right? The train's doing the most of the work, but just in case, someone jumps in front of the rail, or there's a malfunction, you still need that human touch and element. And so the ability to take a piece of information and say, okay, here's the information that's being put in front of me. Do I agree with this? Do I not? Why not? I think that is always going to be incredibly important. And although it sounds basic now, the more that things are automated, the less reliance we have on critical thinking, doing things ourselves. Whether Tesla Optimus robots are doing all the chores around our house, or ChatGPT is creating all our Excel models and business plans, you still need that human element to both find the mistakes, but also to use your own experience of finding past times that it hasn't worked out, to use your own experience. That leads me on to, I want to talk about the companies that I mentioned. We were chatting just before about Nvidia and Intel. So I wrote down some information I wanted to read, and then we could chat about it. So Nvidia is obviously one of the big leaders within the AI space, creating chips. Their market cap's around $4.3 trillion. So they announced a $5 billion investment in Intel on Thursday, alongside a collaboration to develop AI infrastructure and PC products, which ended up boosting Intel stocks by 23% and Nvidia's by 3.5% on the day. We've also seen that Chinese officials have gone about restricting domestic firms from purchasing Nvidia's AI chips, which has prompted Nvidia to strengthen partnerships with like the one with Intel. And we're also seeing that Nvidia CEO Jensen Huang has met with both the UK and US leaders to go about advancing the UK's AI capabilities, positioning Nvidia as a key player in the global AI development. By the way, I used AI to write these notes in case anyone was wondering. And in terms of Intel, Obviously, they secured a $5 billion investment from Nvidia to develop both custom CPUs and x86 RTX SoCs for AI and PCs. Intel stock jumped 23%. But despite the positive news, we're getting companies like Citi, which have actually downgraded Intel to neutral. So it's kind of showing that despite all this good news, it isn't, to look into that in more detail, look at the report from Citi. But we're kind of seeing that despite this positive impact from Nvidia, there are still other things to look at. Going up 23% on a day on a now market cap company of 138 billion, that is still quite a lot. So it's to what extent is this $5 billion investment? Does that warrant an extra 25 billion dollar increase in market cap? That's something to be discussed. So something I wanted to bring this into the initial point of Nvidia and Intel, but also a wider scope, right? Going back 2 years ago, I believe, when Microsoft took around a 50% stake in OpenAI, my initial thought when I saw this age of AI is I kind of thought, at least from the top, there would be a winner. There's always that notion of, does all boats rise with the tide? But also there's this thought that if you look at the dot-com bubble in the early 2000s, there were sort of one or two breakthrough companies and the others would sort of fail. And sure, that can happen. But we're actually seeing that with many companies at the top, like with Nvidia and Intel, like with Apple and OpenAI, like with Oracle, and all of these other companies, they're actually collaborating with one another. So I wanted to get your thoughts both on Nvidia and Intel, but also this broader question of how we go about picking a company to invest in, and whether one of these companies will actually break through and the others will fail, or whether it will sort of be all of these companies in the Magnificent Seven and adjacent to them will do well.
Yeah, it's quite interesting point that you raised there about how all these companies are, fostering collaborations and creating new relationships with one another instead of just one or two being very successful. I think one of the things we do have to take into account is even though they do operate within the same industry of AI and tech, it is still a very wide industry, and they all they all create quite different products. For example, in Intel and Nvidia, yes, Intel creates CPUs and Nvidia's GPUs, but they're two very small parts of laptops. And for someone like Nvidia, for example, to create their own CPUs, to the level that Intel already has would require a lot of investment, company resources, capital. They would have to hire loads of new employees with expertise within these areas, and it would cost billions of dollars to even get to where Intel are right now. So I think as a result, that's why you see quite a few collaborations and partnerships, such as with Intel and Nvidia. And I think for Intel anyway, this is a quite good partnership that's occurred for them, because they've struggled a bit in the last few years. They lost the process leadership to TSMC a few years ago, and was their competitor AMD has been steadily taking over the CPU market share. As well as this, they had major delays in adopting advanced nodes for their CPUs, which damaged their credibility quite a lot. So all these factors have sort of contributed to slight decline over the last few years. Um, and well, one of the main implications of this deal is it restores confidence for investors and potential investors as well, that Intel will be a big name player within AI hardware and not just in PCs. Obviously, Nvidia's gone 80%, controls 80% of the global market for AI GPUs, so almost got a monopoly over them. And with the valuation skyrocketing in the last 1 2 years as a result of the AI demand that we've seen, I think I think for Intel especially, this is a great deal because it restores so much confidence, and it showcases that they see Intel as vital for domestic semiconductor sovereignty compared to TSMC, for example, which is Taiwan company, and there's a bit of um, question marks over that, obviously with its relations with China, and the future's a bit uncertain there. Um, And for Nvidia, I think it also produces another supply chain, because so far they've been almost entirely reliant on TSMC for advanced chip production. Um, and it means that there's been so much demand as a result of AI in the last couple of years that they're struggling to keep up with their supply. So by having this deal with Intel, they can obviously they can have access to loads more chip production, advanced chips, since Intel also have a lot of manufacturing capacity still available in the US and Europe. Um, and this can help, keep up with the demand that we're seeing, which will most likely only continue to grow in the next few years. Um, and it also it allows them to influence CPU plus GPU integration and strengthen its role in AI system architecture within PCs itself. Um, and yeah, I think just looking at the industry in general, I wouldn't be surprised if we see more of these types of collaborations in the future. Um, as I said earlier, tech and AI is very, very broad sector. To manufacture parts, to have expertise knowledge on a specific part itself is already hard enough. But then to go out and um, work out what this knowledge is and create new products is very, very challenging in a industry which is so competitive. And um, with the rise in AI and this being a critical point for a lot of these companies to ensure that their next 5, 10 years they will be successful, I think I would not be surprised at all if we see more collaborations.
I'm gonna make a big theoretical point, so please contradict that if you think otherwise. So a company that I've talked about last week, but we also talked about 2 weeks ago, was Apple, and I think I brought up the idea that investors weren't as confident in Apple pre the launch of the iPhone 17, because when actually looking at the iPhone as well as I think it was like the slim iPhone, the iPhone Air, investors weren't as confident. It kind of seemed that it had gone from a point in which Apple made these very minimalistic changes over time, better camera, smaller phone, different plug-in, like where you put the plug-in, different, take away the headphone jack, go from Touch ID to Face ID, those changes, but nothing as big as the initial launch of the iPod, the iPhone, all the innovations that Steve Jobs brought around 15, 20 years ago when he was the CEO and the leader of Apple. But suddenly investors were like, we're not as confident in it. The stock price went down. And there was also the big thing at which the rate of the market cap of Apple, how that's grown over the past five years, it's gone up more than 100, 115%. But if you look at that same point in time, with iPhones being one of the largest sources of revenue for Apple, to what extent is this going to grow at a rate that matches that, right? So if the market cap is going up at 115% over 5 years, has Apple's iPhones gone up by a similar amount, or have they gone up by a lot less? And I think that was a big question. And then on top of that, there was also I talked about this last week in the Markets podcast, with Google being the primary search engine for Apple iPhones, and they had a relationship in which, well, they still have a relationship in which Google would pay Apple 20 billion a year, which was actually, despite being a smaller percentage of revenue, it was a higher amount of their bottom line, of the amount of profit that they were actually getting, because it was a lower cost for them to actually have that relationship. So it basically made people look into Apple a lot more. But now that the iPhone has actually been released, and we don't have the sales numbers just yet, but obviously all on social media and see how people are reacting to it, a lot of the news has kind of gone from Apple's not doing as well, still a $3 trillion company, so that has to be put into perspective, but Apple's not doing as well, to actually consumers still like the iPhone and what's truly important. And coming from someone that has an iPhone, is speaking to you on a Mac and writing his notes on an iPad, as I'm sure most people are probably watching this on an Apple device at home, is I think there's an element of Apple that people aren't thinking of. And this is the bit where I'd love you to hold me to account if you don't think this is a good perspective. But that's, if you look at when I was younger, so people probably still think I'm young, but only 21 years old. But when I was younger, 5 or 6, the typical thing for me to want to do. I have two younger brothers. I now have a younger sister who's 10 years younger than me. But the typical thing for us was we want to play outside, play football, play rugby, play basketball, play, interact with each other. So we'd have much more friends growing up. But now if I look at my younger sister and her friends, a lot more of them are digitally native. So it's not just about the amount of friends you have and how good those relationships are, but whether they're in person or online. So not only are these friendships and relationships going from in person to online, but what's the mechanism, right? So if most people are developing these friendships and relationships on an iPhone, what impact does that have, right? So even if you go onto your iMessage and you message someone with an iPhone, I think it gives you like a blue tick. But if it's someone with an Android, it gives you a green tick. So even just from that point of how it plugs into the Apple ecosystem and how it looks. If you put AirPods on an iPhone, it sort of pops up and has this nice little display of it interacting. But if you put some like Bose headphones on, it takes an extra little step of annoyance to plug it into the ecosystem. And so when people were talking and investors were talking about, is the iPhone better? What specific specs are being had? For the past 10, 15 years, arguably, Androids are better. Right, they probably have better cameras. They have these foldable screens you can put in your pockets. The actual rate at which they can store things, the price point, the connectivity to Wi-Fi, data, all of the developments they have on many different tech websites, and doing my own research on it, are quote unquote better. But in terms of this user experience, the plug into the Apple ecosystem, how it fits, how aesthetic it is. I've now had Apple products since I was maybe 5 or 6 years old. I've had it for 15 years. Am I going to, even with a big innovation, a new phone, it has to be really big to actually take me away from wanting to use an Apple product or something else. And I don't think that's something that people have thought about as much. Even looking at like a modern day creator like Mr. Beast, who's now at like 400 million subscribers. Even me, right? I'm 21. I've listened to him for a few years' time. I've listened to him for the past few years, and I still enjoy watching his videos because they're so big and so impactful. If he was to say, go and buy my chocolate bar Feastables, or go and try my new energy drink or my new partnership, even if that doesn't become a habit for me, I'm going to be interested in trying it. So any sort of product he has in that ecosystem, irrelevant of how good it is, I'm going to be interested in that. But I would argue that Apple has been what we now see as the social media influencers and influencers, building that cult-like following. They've had that for the past 20 years. Even with this new iPhone, you have people queuing up outside stores. Similarly, when you had Yeezy with Kanye West, that level of cult-like following, how valuable truly is that? And I was actually doing a podcast with a guy called One Chowdhury the other day, who's the CEO of Octolane, which is a Y Combinator-backed startup. They've raised like $2 million within a week. And he was actually saying that one of the most interesting metrics is not only the revenue itself, but when you have a customer on your site, how much increased revenue they're going to spend. And even without looking into the numbers, looking at my own self, if I get a phone, right, I might then get another case from Apple. I might get Apple Care. I might pay for Apple Music. I might pay for Apple News. I might go about encouraging all my family and friends to also get Apple devices and products. I might go about, using Google, which reinforces that relationship with Apple. I might go get extra iCloud storage with Apple. So it's not only what I'm spending on that, but all the extras. And so I'm interested to see that as Apple continues to develop as a brand, it's not just about the rate of innovation that they have, but how can they increase that spend within the products? And even if they did launch, if they had no change to their devices in the next 5 years, maybe not 10 years, but 5 years, I could personally myself still using Apple, increasing my spend, in line with inflation year over year in terms of all of these different products and ecosystems. But if they did then release some new incredible product, like you see with Meta with their glasses, if they release something like that, I would probably look to Apple before I'd look to other brands. Quite a long spiel there, and kind of my forefront of why I think Apple is still such a strong brand. I'm actually not an investor in Apple, in case you were thinking that listening to it. But I'd be curious on your perspectives on, the sort of take from investors not as confident to more confident, this rise in cult-like following, how that's evolved over time, and sort of Apple as a brand, particularly in the wake of the iPhone 17 release.
Yeah, so I think for a lot of people, especially our generation, who've pretty much grown up and only experienced Apple dominance within the phone market. Like, 'cause the first iPhone came out 2007, so obviously when we were still quite young, 3 or 4. Um, from that moment when our first iPhone came out, I still remember thinking when I was a kid, like, wow, an iPhone, like, that's incredible. Like, because obviously when we were still kids, my parents, I don't know about you, probably same, had flip phones or like a BlackBerry um, for work. And going from that to an iPhone was just like mind blowing for me. It's being able to like not only just text, but being able to play games on it, like or watch videos, look at photos. I think it was a big step, and because of that, since then, Apple sort of within, especially I think within our generation, Apple's in our heads like number one, and it's quite hard to displace it. And when we think of Android, like Android's operating system, right? No, not many people can think of like specific companies that actually have Android, like Samsung or Huawei or the other brands. And um, I think that's one of the main issues is that people say Apple versus Android, Apple versus Android, but that's Apple versus Apple products versus the whole operating system, not just one company. So I think there's actually um, not a lack of awareness because obviously those companies are very successful in their own right. But people know more about Apple, and it's in the news more often compared to these other brands. So it's just I think it comes down to visibility issue as well. And with the cult-like following that you mentioned, I also think one of the reasons why so many people have stuck with Apple is the range of products, of high quality products like iPads, MacBooks, how easy it is to transfer data within from one to the other, and also the faff of getting when if you were to go from an iPhone to a Android phone, Samsung for example, the to transfer your data, like transfer your photos to from an iPhone to a Samsung, I presume would be quite difficult. Whereas if you get a new phone, for example, all you need is your Apple ID and then boom, 2 seconds later, all your data from your old phone has now been transferred to the new phone. So I think that's one of the reasons for the cult-like following. And as you mentioned, and I agree with you, as you said, with all the different amenities like the cases, Apple Music, it's diverse. Apple's got products in so many different areas now, not just tech, like music, news, um, and I'm sure if like the Meta glasses ideas becomes very popular, Apple will respond in the future and create their own glasses. Um, right? So I think that's one of the reasons why they've got cult-like following. And yeah, as you said, I don't think Apple's the best product. There's probably much better phones out there, innovation-wise. Um, I think Face ID got implemented into Apple maybe probably I think it was about 2019, 2018, 2020, around that time. Face ID's been around for 10 years. Like it's not something that was new when it got released on the iPhone. But but yeah, I think it's just a cult like fun, and that's why people still buy it, and that's why I think investors' fears have sort of turned into optimism because obviously revenue sales numbers aren't out yet for the Apple iPhone 17, but I think in India alone there was 19% higher pre-orders compared to the iPhone 16. Obviously, India as well is a massive market. Um, so it shows that people are still willing to buy these products. Like there's still excitement to go out of your day on release day and go to the Apple store and line up and buy the new product. There's still that excitement that there was 20 years ago. Maybe not to the same extent, but there is optimism, and I think as a result, investors are sort of got rid of their fear and realized that look, it in the end of the day, this is still a $3 trillion company, and it was the first $1 trillion company, well, first company to ever reach that $1 trillion threshold. So I think they've got the right foundations, and look, Apple will still be around in 10, 15, 20 years, I'm sure of it. Releasing whatever the new tech, probably we're still releasing phones and whatever new tech and innovation that might have occurred in that period. And yeah, so that's why I think investors have become a bit more optimistic compared to recent fears of the last few weeks.
I can recall seeing a graph, and you can even look this up on ChatGPT, Grok, whatever AI you use, or even Google, looking at the 10 most valuable companies over decades on average of, which moved in and out of the top 10 over each decade. We're looking forward in the 2020s now, the 2010s, 2000s, 1990s, etc. And if you actually look at those of which were the top 10 on those dates, there may have been a company, like one company in 2 decades next to each other. But for the most part, those companies they're actually different, kind of going from more of oil companies to now as sort of you seeing Apple and Nvidia get involved. All of these companies over time, many companies still in the S&P 500 were in the top 10, not many, but more than 10, maybe 50 or so, well, 20 or 30 or so of those companies were in the top 10 at some point and are still doing well, but relatively not as well. So Apple is one of those companies that, and even Nvidia, let's see if Nvidia can hold on to it, that gives the question of, is this idea of market dominance, is that something that can be prolonged 10 years, 20 years, 30 years? Will there always be this necessary thing in which there will be a new entrant to the market? Or are we getting to the point as companies reach 1 trillion, 2 trillion, 3 trillion, 4 trillion, etc. valuations, that they are getting too big to fail? And I know this question of too big to fail has been something over the years, even economic cycles of going through boom and bust, in which you sort of get this reset, but which there's not only the incredible, the iPhone, for example, at Apple, but you have the AirPods, you have Apple Music, you have all of these things. So even from a diversification standpoint, you can't call Apple just an iPhone company. It's iPhone, it's computers, it's music, it's digital infrastructure, cloud computing. At some point, investors are hoping for AI. So that's a question that's kind of on my mind moving forward. Linking back to what you were saying with regard to Apple, there's often been done experiments. So, would you rather gain $10 or lose $10, and what would have a bigger impact on you? Again, I'm not a scientist, so please look into this yourself. But there's often been scientific studies that have said that people feel a bigger impact over things that they lose versus things that they gain. So if you were to actually, think about times when you've missed out on a club or a university or a friendship or relationship or done something bad at work, and how that's kind of lingered in your mind, versus getting a pay rise, finding $100 on the street, meeting someone new, whatever it is, unless that person is your wife. A lot of these little things and interactions that you might have, the good is kind of like, oh, that was cool. You kind of forget about the next day or a few days after, but the bad thing kind of lingers with you. And that links to Apple in the sense of there would have to be some really big, groundbreaking level of innovation to get me to move away from Apple. A better camera, a better piece of software, Face ID, or whatever it is that you put on. I think we sort of have this almost familiar, family-like relationship with Apple in a weird sense, in that the amount of times we're picking up our phone a day, the amount of hours that we're all embarrassed to say that we spend on our phones, to actually lose that impact of being digitally native on an Apple device and having to give that up in a sense to go to Android is what's stopping people from moving. Even linking to a modern day example with Labubus, which if you don't know what that is, there are these sort of ugly teddy bears which people pin onto themselves, and it's kind of this mystery box type style in which you can kind of there's different it's just big into energy series. I only know this because I've got a younger sister, but she got one of the really rare ones, so she was very happy when I got that for her birthday. There's 6 ones that you're expected to get, each with a different probability of opening it up in this wrap. And when you get it, it's like, oh, this is one of the more common ones, this is one of the 6. The one I gave her had a 1 in 200 chance. It wasn't even on the box, so we can call that a great birthday present now, locked in time on the podcast. But the point of that is it's not just about the innovation with Labubu, which if you look at Popmart and even the company that owns that, the stock price just absolutely exploded. But for me, I don't think that is just an innovation standpoint. Like another company, if they were to come in and create a newer, cooler, maybe not cooler, but a newer and more innovative teddy bear or Labubu, I don't think that's the difference maker. I think it's the cool element, it's the stylistic element, and how that intertwines with societal norms, expectations, what you should or shouldn't have. So even having a new iPhone, even if it's not better, that societal norm of, oh, you need an iPhone, would convince people to have it, and how that relationship works. The other company that I wanted to link to is Oracle, with one of the key owners, and I believe the CEO, but I'd have to... Is Larry Ellison still the CEO of Oracle?
Um, I'm not too sure off the top of my head.
He's not. Okay, but he's definitely a major shareholder in Oracle. And I saw an interesting thing the other day that he's basically gone from a 24% ownership in Oracle up to 41%. And they achieved that by via share buybacks in which, when you make a certain amount of money, instead of using that money to reinvest in the business, you buy back the number of outstanding shares. If the number of outstanding shares gets reduced over time, someone like Larry Ellison, his shares aren't being bought back. He went from owning 24% of the outstanding shares to owning 41%, so having even more control. But he's not only had a big impact with what's going on with Oracle, he's also, as Trump has announced in the last few days, been announced as one of the people involved in the TikTok deal alongside Michael Dell and the Murdochs. And he's also sort of building an entertainment empire. So we're seeing the billionaire go from just people that are extraordinarily rich through one company to sort of getting ownership on everything. On that Oracle standpoint, they're launching expansion of AI into the UK. They're doing lots of partnerships with Nvidia, AMD. They had a double miss on earnings, but I think they went up by like 40% the other week. What have you seen with regard to Oracle? Why do you think they're doing so well? Do you see this going from a player that was kind of, doing really well, but I kind of at the back of our minds is doing better? What do you think is the general story surrounding Oracle and Larry Ellison with TikTok, Oracle, entertainment, etc.?
Yeah, I think so obviously Oracle hasn't, well, compared to like Nvidia, for example, Oracle hasn't been in the forefront of the news in the last couple of years. Obviously all the talk's been on Nvidia and like, oh my God, how they've grown so much. They've now worth $3 trillion, I believe. I could be wrong. Um, um, but Oracle's sort of been just keep a bit quiet. Still, obviously they're still a massive company within the industry, and they've very successful one, might I add. But I think one of the reasons why Oracle is doing so well is because of their cloud infrastructures is it's gaining more traction because of the global surge in demand for AI. So, obviously big AI players like OpenAI and well, other AI players are looking for more capacity beyond, AWS, Microsoft, or Google Cloud. And that's sort of where Oracle stepped up and offered a alternative to it. And this demand of AI is only going to get better, only going to increase in the future. I think we can all agree, especially in the next 5 years. I don't know about the long term.
I
There
would
might
agree
be,
with you.
um, yeah. So there's more demand for these cloud infrastructure that Oracle provides, which is hence why they're starting to do really well, and one of the reasons why their stock went up so drastically within a few weeks ago. I think 36% it was. And even if you look at their revenue prices, it's going up year on year, quite quickly. I think it was up 12% year on year this year to 14 and a half, nearly $15 billion. And the cloud revenue itself was up 28%, which again shows the massive growth in demand within that industry. Um, so I think for Oracle themselves, it's just continuing that positive momentum into the future. Obviously, the demand is going to be there, so they need to ensure that they become a market leader within storage and data centers. And yeah, they got to, I think for Oracle, like Nvidia and Intel, it will be worth having creating new relationships or new partnerships with specific AI driven companies. Um, because by doing, if you, hypothetically, if they got a partnership with Microsoft or Nvidia again, for example, that would already be such a large percentage of the market that they've captured. Um, and it will continue the increase in demand for Oracle stock, and their revenues will go up, and share price will go up, market share. It will all be very positive for Oracle.
Yeah, I'm not sure if this is you were mentioning Oracle or Nvidia, but Nvidia's market cap is 4.3 trillion and Oracle's is 877 billion. Just in the interest of time, I kind of have made some other notes I just want to quickly rattle off for the viewers before asking you for any other stories that we've had this week, just to close off. But yeah, as I mentioned, Trump has said that Larry Ellison, Michael Dell, and the Murdochs are potentially looking into the TikTok deal. That would give US ownership 80% of TikTok within the US, and they'd also be making an algorithm that would be managed solely within the US for people within America. So that would lead to people taking their followings over from the old TikTok into this newer TikTok, but with a new algorithm specifically made by people in the US. So it'd be interesting to see what happens there. With reference to Larry Ellison, he's been able to, get his hands into many pies. So it's been interesting to see what relationship that will have. Also, whether, there's always that monopolistic fear within a singular company. But in terms of someone having so much impact in so many different industries, it'll be interesting from both a regulatory standpoint, but also from an ethical standpoint, to what extent a billionaire can have so much control over so many industries, and the competition element that has, particularly in something like entertainment, news, and media, in which it's much harder for entrants to get to the 100 millions, billions, or even $1 trillion range. Some other key topics that I thought were interesting to mention. In crypto markets, 50% of the top 150 coins are trading above the 200 moving day average. Bitcoin is sitting around $112,000. There was recently the Shanghai Corporation Organization Summit, which was between China, Russia, India, and North Korea, in which they're pushing for potentially an alternative global economic system. We'll see to what extent that rings true, and particularly as the dollar has dropped in value over the last couple of weeks, or Trump's been pushing for that to open up the US to more economic abilities. But with tariffs, countries have seen that the US has less allegiance to them. So to what extent do they look towards working with China and using the Chinese currency instead of the US? We will see. My prediction is that the US dollar will be there for the foreseeable future. In terms of tariffs, since the start of the year, the US tariff rate on average has risen up to 17.6%, which on average has taken up the tariffs by 2.8% since the start of 2025. The Trump also wants to take quarterly earnings, in which public companies release their earnings 4 times a year, from 4 times a year to just twice a year, so just every 6 months. We'll see to what extent that has an impact. A lot of people have kind of been saying that this impact is so that companies can look more long term, but to what extent is 6 months really long term, we shall see. And we've also seen that as Donald Trump has doubled down on fossil fuels, we're kind of seeing, will China be able to compete on that? So the US had actually risen down, or winded down more than 400 billion as an estimate in terms of subsidies. This is from the Wall Street Journal. And also the Trump administration terminated a multi-billion-dollar loan guarantee for the Midwest transmission line, which halted a near-complete wind farm off the coast of Rhode Island and cancelled $3.7 billion in funding. Despite the US focusing more towards fossil fuels, this enables China to compete more, as the people that are actually being beneficiaries of the subsidies in the US aren't able to compete as much. The last point that I thought was interesting to bring up, more so from an investing in VC standpoint, money market funds have reached another record this month, as they reached over 7.7 trillion in assets. Something I think is very interesting, which I brought up to you earlier in the podcast, was the idea in which companies are, will it just be one company that wins, or will it all be all the sort of boats that get out? And I think as time will tell, over time we will see these sort of breakthrough companies, as it's only been a year or two since this sort of AI has come in. But looking at, from both sides of view, particularly with AI wrappers, in which a lot of companies like Lovable and lots of other ones are reaching multi-billion-dollar valuations, we're seeing companies use the infrastructure provided by OpenAI, Grok, and building companies on the other side. Where I am both seeing from a VC standpoint that a lot of these companies will continue to do well, both from the standpoint of, if AI is taking on law, AI is taking on investment banking, AI is taking on asset management, building, carpentry, computing, selling, whatever it is, there are so many industries. And so if AI is as groundbreaking as many of us think it is, there is just so many different sectors that it can go about revolutionizing. So there is less competition because there is simply just so many things to go out and look at. But also from the point of, there is so much attention on building with AI right now that other industries, if you're of the notion that AI won't fully replace a law firm or a carpentry firm or a investment banking firm or whatever it is. There's also the notion at which you can go start or invest in a company that isn't AI adjacent or using AI, because less people are building now, and with less competition, more focus about getting market share. So that's something that I've been interested in. I actually think both can be true. I think people will continue to do well over the next few years, both in terms of valuations and success, because there are just so many industries. But also, I think it's good to look elsewhere out of AI. Those are sort of the main sort of topics that I had for the week. Luke, is there anything that you thought I've missed that you think would be good to add on any of those points as people look ahead at this week?
Well, I think you've actually covered the main points. I think for me, I actually found the quarterly versus semi-annual earnings report quite interesting, because there was a lot of people debating about it, and what the pros and cons will be if this actually occurred. I think I don't think the US will actually go to a semi-annual earnings report, and I think it kind of sounds like something that Trump might have overheard from something and just said, because he does say a lot of stuff which he doesn't follow through on. But I was actually quite interested in the debate that followed afterwards, because obviously in Europe and the UK, for the last 10 years, just over 10 years, quarterly reports haven't been enforced legally, and it's while the UK has predominantly still stayed as a quarterly report system. If you look at Germany, for example, they're much more semi-annual. And yes, of course, companies do still give quarterly updates, but because they're not required to, right? So, and I find it really I just find the pros and cons quite interesting in the debate. As you said, 6 months is not very long term, so it's will it change that much? Will it make that much of impact? Probably not. And I think all it will do is probably just. I don't think it will be that much more economic uncertainty, because I think a lot of companies will still make that update every quarter, just maybe not to a certain extent, and it will probably reduce costs for companies, because I presume having to dig through all this information every quarter will be quite not just time consuming, but also cost resources and people to do. But I think it's just a kind of interesting conversation that people have been having, and we'll see if it actually happens. I don't think so, but it'll be interesting to see.
Or maybe just because of that one statement, he's going to go out and he's going to quote Luke Sloman on the Personal podcast.
Look, if he does that, I think this podcast would have done really well. So we'll hope. Let's hope. Let's hope.
I had a few more smaller things to add. I've had quite a few people asking me about, as people want to enter the recruitment process, and I'm not positioning myself as an expert in any capacity with regards to internships, market data, recruiting, whatever it is. But even, going from no knowledge to a base level of knowledge with news, being, critically thinking about the news and how you look at it. A lot of people think that there's sort of this like hidden thing of what makes you informed versus not. I would actually argue that, just go look at the front page of the Wall Street Journal, go look at the front page of the New York Times, of Forbes, whatever it is, CNBC, and just look at what the stories are. Because what you'll notice over time is that if there's not much news going on, the same stories will kind of be on their front page for a few weeks. They'll be talking about the same things. It will go from these big stories like the Fed rate cuts or, Fed rate hikes to going and talking about, something random that Trump said 3 years ago. That is actually will give you an added level of nuance and understanding to the news stories coming out, because you can. This week, for example, I think there's actually quite a lot of news. Even at the end, that's quite rare for me to have to just read off stuff because there's so much to cover. The other thing I was going to mention is this podcast is only the fourth one. We're kind of making adaptions over time as we go about. The first podcast that I did with Stephen Roberts, who's a former partner at Horseman Capital, now the chief investment officer and founder of Orgai Capital. It was very, lots of different topics focusing over time, many of which were kind of bigger trends and important things, but things that weren't particularly just focused on that week. But we kind of covered 30 to 60 different things for a very short amount of time. But now with this podcast with Luke 3 weeks later, particularly over Apple, Intel, Oracle, the Fed rate cuts, those are kind of the four big topics that we focused on. So I think there is definitely a balance between covering a lot, but also going in detail on the topics. So just bear that in mind. I think I'm going to lean more towards going in detail on fewer topics, and there may be a few things missed, but I think that level of nuance is really important, because with investing, even if you have a certain price target in mind, when you get to that price target, have circumstances changed? Is the company overvalued at that point? Is it correctly valued? Is there a new case moving forward? The market is always going on. There's always a new story. And so I think that nuance, even with regard to what we were talking about with Apple and a cult-like following, I think that's a very interesting and needed perspective, because of all the news stories you find on the internet, it just takes one different change in thinking, which will keep you committed to that company when it's not being rightly valued over being valued too much or too little. It's that level of understanding that helps you to cut through all of the noise and focus in on what's important. Luke, any final takeaways before we close off the podcast this week?
I think you've summarised it as perfectly. So thank you for having me on.
Yeah, well, thank you, Luke. Luke's gone from a one-off fill-in guest to he's going to be back in 2 weeks' time, and perhaps even more in the future. So thank you so much, Luke, for coming on.
Thank you.
I'm really happy we touched on so much, and I hope that everyone listening has a fantastic week ahead.